you know, dollar rising from there, should rise from there, because historically as well, when the price was at this level here, we have seen some kind of momentum upwards. So we're expecting dollar to rise from here. Could rise as high as 92.47 on the DXY index, which right now is 19.09. So it could rise about 37 points, around 92.47 index. When that happens, we could see euro dropping all the way a low of 1.1897. So that could be the next scenario for dollar. We could see dollar gaining some quite strong strength, because buyers are most likely going to come in and push the dollar upwards from that 92.09 level, because which very strong, very juicy buy level for buyers, and they will definitely don't want to let dollar drop any lower than that. So we are going to see USD drop. We're going to see GPSD drop. We can clearly see GPSD currently showing some kind of a downward momentum. Did reach as high as 1.3395. Then sellers finally came in the market. They started pushing price down. Currently, GPSD failed to make new higher high and close below. Another strong indication that dollar is gaining some strength. And by a start of tomorrow's trading, start of tomorrow's New York session, which is around 1:30 GMT, you might see dollar gaining more strength and dollar going up, in which we will see GP and USD dropping. Let's quickly look at gold. And gold, on that basis, we are seeing some kind of bearish kind of momentum. Hasn't been able to break above that level of 1974, which I talked about in the morning. So quite a strong resistance level currently. Hasn't been able to really break above this level as of yet, but hopefully today, in terms of trading, gold did look like a very strong uptrend. Has been rising since early in the morning today, since let's say from 8:45 in the morning. We saw a new new candle being formed, a strong bullish shooting star, and since then it's been rising. So it's been making new higher highs all along. Another strong indication that quite strong buy pressure in gold, but that could all change. We can clearly see dollar is getting to be getting under a strong buy pressure momentum right now. When dollar rises, we all know that gold drops. So we could see gold dropping back to lows of 1960 or even as low as 1949 if the dollar does decide to rise quite strongly. So we're going to keep a close eye on DXY, how DXY plays out, because that will actually show us where the gold will really go next time. So if we see DXY starting to rise and we see DXY gaining strength, we can start seeing gold dropping. So keep an eye on gold, guys. Could see some massive momentum in gold soon. Currently trying to break above this trend channel just created right now 15-minute time frame. So we can see whenever price reaches at the support level of this trend channel, it rises, and whenever price reaches the resistance part of this trend channel, it drops. So we can expect gold to drop from here, because it did tested this trend channel resistance, this level here at 1730 by an hour or so, which was 1974.91. Then it dropped, and since then hasn't been able to really make a new higher high. So another strong indication that quite strong sell pressure. We could see gold dropping back to lows of 1965. So we're going to keep on a close eye. Once the mark candle closes below this level, below 1970, so around this level here, when the candle closes around 1970, we could look to short gold back to as low as 1966, or if it could go as low as 1960. So keeping a close eye how gold really plays out for the next 2 hours or so. And it's going to be another 3 hours. We're going to see a close of this 4-hour candle. Very important close, guys. This will actually give us a quite strong overview of what's the upcoming gold strategy would be, because we can clearly see gold as currently testing a very strong resistance. Has been at this level for quite a few times. Last time at this level as 27th August, and we saw a massive red candle, a massive bearish candle. So this could give us a good insight of what will really happen in the next 3 hours. So when this 4-hour candle really closes, we could clearly see where gold could move in the next few hours, or where could gold be going tomorrow or day after tomorrow. So keeping a close eye on gold and keeping a close eye at the level of 1970. Let's quickly move on to RSI. So let me just tell you how to add RSI. Just all you have to do is basically just go there, type RSI. So we use RSI is known as relative strength index. So I'm just going to zoom this out. Just going to pull this up. So basically, RSI is a simple way of finding out what are the overbought and oversold zones. So this is basically overbought zone. So whenever price reaches above, let's say the pink level here, which is also known as level of 70, whenever price goes above 70 is overbought, and whenever price goes below 30, it means it's oversold. So as you can clearly see, when price was overbought at 76, which was this level here, we saw a downward momentum. So when price is overbought, it drops. When price is oversold, it goes up. So these are two extremes that we can basically RSI principle works on. So whenever price goes above this 70 level, it means that it's been overbought. We might see sell pressure come in the market. We might see sellers come in the market and pushing the price down, and that's what happens usually. You see when the price was at extreme of overbought, we saw sellers coming in the market and pushing the price down. And when it was oversold at this level here below 30, we saw buyers coming in the market and pushing the price up, which was this level here, exactly at this level here today. We can see, guys, when price was oversold, we saw buyers coming in and finally pushing the price upwards. And since then, we had price going up and up and up since the sellers came in the market. So on that basis, we could use RSI on our day-to-day trading basis. So whenever price reaches, let's say a price reached 76 and it's been overbought, now you look for a sell opportunity. You do not enter the market straight away. Obviously, you look for a support resistance lines. You draw your support line, you draw your resistance lines, and you see strong levels. For example, here there was two confirmation, a trend channel support level. So this was a trend channel support level confirmation we had. Plus we had another confirmation of overbought, oversold zone. So we knew this two confirmation, quite strong confirmation. So if you were entering the trade as a buyer somewhere around here, put your TP, let's say as high as 1970, you would have at least cost 15 points, which is about 150 pips. So you can use RSI in that basis as well. Of course, RSI is not just used for overbought and oversold zone. There are 50 level zones. So there's a 50 level line here. Also, RSI is used in conjunction with Fibonacci, MACD, EMAs, which is this EMA here, 50 EMA, or moving averages. So all of that is also used with RSI, but of course I'm not going to go into that right now because it's a free lesson. If you really want to learn more about RSI and how to use RSI into your trading and how to incorporate RSI into your trading system to be more profitable, you can join VIP, and we teach all about RSI in our VIP. And our VIP students are already using RSI, MACD, moving averages, and other indicators that they want to learn about. We also teach them in there. So if you're interested, please join VIP, and you can learn about all the other indicators that are profitable. There are many, about 1,000 indicators out there, but not all of them profitable. We actually give you the indicators which are profitable, which you can learn and start using straight away. It's not even hard. Plus we give you a mathematical formula with these indicators that you can use day-to-day basis before you can start trading, so you can understand how the market really moves. All right, guys, thank you so much for joining. Also, if you have any question, you can ask me right now, or we can always ask the question with my team or me. We are more than happy to help you guys. Thank you so much.